Hello guys, welcome back to this channel again. So in this video I'm going to show you a trade that involves only two processes, the first one and the second one, and then you ignore the rest, which is risk entry, like the one I took yesterday and did not play out. So just to show you that sometimes it plays, sometimes the strategy does not play, because there's no holy grail. So as you can see, the market has already aligned. So that is the second step. Then the third step is to take entry, what is called risk entry. So immediately 4 hours closes in your direction, you take entry, and this becomes you can place it as a 13 pip stop loss, or you can even add some stop loss depending on your greed appetite. So 13 would be still okay. Like my trade yesterday was 13 on the same pair, but it did not work out. So you can target maybe a 1 to 6, since this is the ideal TP. So this is the ideal TP, 1 to 5. This is the extreme 1 to 6. So just 1 to 6. So we can add it to make it 1 to 7. But what I said is that you must always be trailing your stop loss, so that you don't give the market money. Once it has reached 1 to 4, just trail a stop loss, so that even if it comes and stop you out at 1 to, but for the risk entry you can avoid just trailing a stop loss and let it play where you want to pick your take profit. If you want to pick it here or here, regardless. So this is how this one played out, and immediately you can see this played to 1 to 7 perfectly. I said you can only add 1 pips on top if you don't want to swing it for long. But if you want to swing it for long, you can even leave it for long, because eventually it will just play out. Provided you are in break even, you can just leave it for long. As you can see, how long did this go? This even went for a 1 to 12 from 13 pips entry. So if you want to hold it, that is why this is called a swing strategy. If you want to hold it for maybe 2 to 3 days, 4 days, you can try and hold it, and you can see there's maximum profit in it. So the same strategy is the same thing I took yesterday on the same pair, but did not work out. This was it, Australian card. So I was waiting to see. So market aligned perfectly, it pulled back, gave me entry, and I took a 13 pip stop loss. This is 14 pip stop loss, as you can see here, targeting a 1 to 6 on the minimum side. So it did not work out. You can join this group, by the way, it's free, there's nothing here. So it brought me back to break even and a little bit of loss, which is okay. So that is just to tell you that the strategy is not perfect, and for that reason, the good thing is that it can give you at least a 50% win rate, and the average RR we need is at least a 1 to 4 if you are not in drawdown. If you are in drawdown in any of your account or challenge, then like you can see, this one was a very good place to get stopped out at 1 to 5. This was just enough. Or if you wanted to scale in multiple position, that was still fine. The goal is to recover from drawdown first before you have the luxury to do all these unnecessary things. The goal here is to get this at TP here, and that's it. So that is risk entry. How did it arrive? We only go to 1 day, and what do? We get the candle for 1 day. So what did 1 day do? We only mark 1 day. So as you can see, the market has been buying. This is a bullish market, so there was a trade opportunity here. This is a trade opportunity. This is a trade opportunity. I think a very short video for this. And then there was a trade opportunity again here. So on 25th, like I said, almost all these pairs gave me trade, so I only picked 2. So as you can see, the market has pulled down on a bearish market. What does that mean? That 4 hours is now doing a lot of damage pullbacks. So 4 hours has pulled back, etc. So once 4 hours has pulled back, to tap onto the decisional point of interest or extreme point of it, that is none of our business to know. What we are interested in is the day it will pull back. Otherwise we don't take trade. That is why I have so many pairs in my watch list, and today I don't have any trade. I don't have. So that is why I'm able to shoot today. I've shot this breakdown, 5 of them, and I'll be uploading as time goes by. So what happened here is that this market broke structure here on the upside. That is for people who wonder how this trade comes to be. So this was a break of structure on the down on a daily time frame, or we can even just say it 4 hours. This was a break of structure on 4 hours. So once 4 hours break structure, what do you expect? That is buy side liquidity already taken. So you expect that there is going to be inducement being taken. This is the major inducement. Those ones are other minor inducement. This is where this move originated from. So this is what is called can be even major inducement. So once IDM has been taken, the market is just to look for something to tap on. Like in this case, it tapped onto this range here. This is the range here that is holding these prices. So once it tap on this range, now what do you expect? This is additional POI. So we are expecting a change of character in 15 minutes and then a push up. But that is not our business. That is not my business to have such analysis paralysis for no reason. So what we normally do is we just wait for the day that it does the opposite of all this, and then we will opt in. So what do we do? This day has already closed bearish, so this would be the overall target. It has done all that. This day also did that. So we go to 4 hours. What does 4 hours has to do? 4 hours will give us alignment on the daily time frame. So using our checklist, we need alignment in 4 hours. So personally, this checklist is there, but it is there in my brain because I'm the one who crafted it. So we need 4 hours alignment on the daily direction. The reason why we are looking for 4 hours alignment is because we need 15 minutes to align. 15 minutes when they align, we don't have that stress of going down to look for 15 minutes change of character. We just need to wait for the high of 4 hours to be taken. If it didn't take the high of this and still propel down, that would be none of our business. We just wait. If it keeps propelling like that for, let's say, 3 to 4 hours, three candles of 4 hours, then why should we be looking for trade in that direction? It means that the market will keep tanking down, and that is how we've avoided loss. So what do we do here? This has already aligned, so you can take your risk entry. That is option 1 if you don't want to go into this. Sometimes I get tired when the stop loss is very small like this. I don't want to bother myself so much. I just take the entry and then I go back to sleep if I want to sleep, or I start reading and I start doing other things, because I wake up at 4 a.m. as you can see. So even if you woke up at other time frame, so like let's say I'm 30 minutes late, sometimes see the sleep is not your own. You did not create sleep. So sometimes you can wake up and by the time you go to the chart, the trade is already happening. So ideally, one thing that I always don't indicate here, but it is very important, maybe I should start indicating it, and I say it in almost all the thing, is that after first 4 hours alignment, and then you check room for pullback. So you have to check room for pullback. What do I mean by that? So let's update that so that check room for pullback. So let's update this so that, like I said, there are so many things that I'm not writing here because it will make this thing, because it has rules, it will make this thing to look so bulky. So this is my swing intraday strategy. So you give it room for, you check for the room, you check room for pullback. So if you look at these 4 hours, you should not be expecting a lot of pullback because the market has already pulled down. If the market these are some rules that are there if them to make me know when I should take risk entry or not risk entry, or I should wait for deeper pullback. This is the next part. So when the market takes the high like this and then comes down, that means it has already started pulling back. So if you check here, if the market closed somewhere here, it means that 30 minutes has not pulled anyway, so it must pull down. But when it closes like this, there is low chances that it will pull back. So the most important thing again is to see that the market takes this high. If the market takes this high without heavy pulling back, it means that you can go and you can keep buying the market because it won't pull back. Another room for pullback that we check is possibility of fair value gap. So fair value gap happens when the market close up here but did not pull back in its movement of 4 hours. So if you check this, you can see that the fair value gap is very small. So the market is very much in a range. So what is happening, we are ranging and then initiating. So we always want to look for the mitigation, range, initiation, mitigation, continuation. So we only trade continuation leg. So that is why we need this 30 minutes V-shape aggressive manipulation and wicks. In most occasions it becomes very aggressive. Even if we took this high here, it will be no problem. So we are just looking for, I don't expect deep pullback, but if it occurs, well and good. Sometimes if the market closed somewhere here, I would expect a deeper pullback, but since it has closed here, so what we do is to see what happens. So the market starts by pulling down to fill that imbalance. As you can see, it has already tapped on that fair value gap. So let's see what it does next. What does it do? Immediately it leaves aggressively now. So first 30 minutes V-shaped aggressive manipulation. So this would be our manipulation, and then this would now be confirmatory that we may not aggressively pull down. The momentum is on the sell on the buy side. Now one thing with this is that if I take this here, it will be a very big stop loss, and that is something I don't like. I would have taken this here with the same stop loss and I would be in profit now, and I would have a very tight stop loss somewhere here because it was equally 13 pips. So I wouldn't do that. I would try and see if I can get a small reaction of, let's say, 60%. If I can just get a pullback of 50%, I'll be very much comfortable. This is not a must. You can just take entry. It's only that this is now personal preferences, and more so now from my experience of backtesting this strategy, that is how it is. So I want to 10 would be a very good stop loss for being patient and waiting for all this to play. Otherwise I would have taken it from that point and I still would have gotten a good entry from that. So let's see if it will play out. Now this is where you see trade playing out, and it has left you alone with your, so at this particular point you can even target, you can have hopes of targeting a 1 to 8. This is the only point where market leaves without you and you are seeing. So alternatively is to go to 5 minutes and wait for the same thing to happen here. It will pull back if it likes, or it will go away and leave you there. So let's see if it does pull back. If it doesn't pull back, that is how you've been left there. As you can see, that was immediate kicking pushback, and then it massively went. So that's it. So as you can see, it was a gamble, but it was a worthy gamble because it tapped on it 10 pips. It tapped on it with 10 pips stop loss here, and then you got your 1 to 8. So what happens here is that the first 30 minutes V-shaped, that is from entry, 30 minutes full body closure, 30 minutes full body closure. This was the 30 minutes full body closure. Then few pips above or below the above 30 minutes candle. So on this candle, few pips will be below it. So this would, you can have it tight like this, but that is being unreasonable. We all know that that is being unreasonable. So you give it room for breathing, and that is why you have to place maybe somewhere here like 10 pips stop loss, or even 10 pips is very okay, and then you target a 1 to 8. At this particular point, when the market had reached somewhere here, maybe a stop loss should be here at a 1 to 3, 1 to 3.5 here, because you're expecting more. 1 to 4, it's very okay. So when the market came here and was misbehaving, that would be a stop loss. When market came to this particular point, what do you expect? Your stop loss should be here. Your stop loss, immediately this was taken, your stop loss should be here, because I rather not see the market take my 1 to 6 after taking this buy side liquidity and start selling. So it rather stopped me at 1 to 6. I'm very comfortable with it. So immediately take this one, it still continues to take you to 1 to 8, so you'd have closed there and leave the market. So if you're somebody, like I said, who wants to swing part of it, you want to swing it for 2 to 3 days or 4 days. As you can see, the market heavily short, but you're not going to get all that all the time. all the time you'll be leaving market, you'll be leaving a lot of money on the table in the name of swinging, which is not ideal. The swing part comes in when you want to use 4 hours only, and that would be very good to swing it when you want to use 4 hours only, because it will give you more opportunities, and then it will give you easy time, because you only need like 2 to 3 checklists. So this is just, you need daily time frame, and then you need 4 hours to align. After 4 hours align, you ignore all this and you take risk entry if it pulls down. If it doesn't pull down, you have to wait for it to pull down. While it is pushing down, then that is when you can now take your trade and move with it. So if somebody is targeting 1 to 20, it's still possible, take it, but this is going to, this may take you down. Like this is now seeing your profit leaving you alone, and that is how you would have lost a very good opportunity to collect a 1 to 16, unless you are trailing your stop loss here, you trail your stop loss here, you trail your stop loss here. So that is why it's swing. Swing is you trail your stop loss if you want to swing it, because currently that is where the market is, and this is where it messed me up yesterday, because as I'm recording this is on 23rd, so this is how your profits will be evaporating. So it messed me up yesterday here. So that is how. So for on this entry, this is same as the entry I took yesterday. If it is too big, sorry, if it is too big, if this 30 minutes candle is too big to give you a good entry position, just let it pull back a little bit, knowing that you are sacrificing missing trade at the same time. So if you check this, it was so big, so I had to let it pull back a little bit. So when it started moving a little bit, now I took my position, and as you can see, now it went well. That is how to hack this thing. So if you want me to tell you more about this strategy, just join the group, and then we will be talking. It's free.